In this video, I want to quickly use PMI cash flow model and explain how I use PMI cash flow model to pick a live trade on CHF uh, JPY. This is very important for those that have been following us on this YouTube channel. You will now see how we take our trade using a step-by-step trading system. And let me quickly start with how do we tell our cash flow narrative. I've done a separate video on cash flow narrative, but I want to quickly overview how we tell the story before we go ahead to pick trade on CHF Our cash flow narrative is very important because this is what we validate the asset that we are trading and pinpoint the buyers for the assets. So the first thing we do at Potential Miners International is we look at some indices. We look at those indices so that we'll be able to tell the story of where is capital flowing into and where is capital flowing out of based on the sentiment of the global market. So we look at the S&P 500. The expectation is that if S&P 500 is on a bull run, it means that the global market is on a risk on. So in addition to that, we look at the Nasdaq Composite Index. That also confirmed that we have a risk on market sentiment. We look at the Dow Jones. That also confirmed that we have a risk on market sentiment. If you are not familiar with market sentiment, I've done, I think, quite a number of videos on this YouTube channel where I talk specifically on market sentiment. In fact, the last one I did, I talked expressly on what and how to trade during a risk on sentiment. So you might need to search for that video so that you can really understand better. So the next indices or index we look at is the VIX, the volatility index of S&P 500, and the expectation is that once the VIX is below 20, it's a confirmation that the market is in a risk on overview. You can see that the sentiment, I mean, the VIX is around 15.88. As at when we pick it, it was around 16, which is still lower than below 20. Then lastly, we want to look at what is the dollar aversion tone. So we overview dollar aversion tone. I entered this trade yesterday night around 9 p.m. I think, if I'm not mistaken. So, and this morning the trade, cashed out. So, but I want to quickly show you step by step how we pick this trade so that you can know what is possible in the forex market. A lot of the times, people think forex is for those young guys that just want to gamble around. But Potential Miners International, we are coming to tell a separate or a different story to begin to populate the idea that if you choose to trade in the forex market, there is a way you can trade from a professional standpoint, that you will not gamble your money and you will not expose yourself or your capital to unnecessary or unreasonable risk. So this is the reason behind why we are pushing out some of this information and educative videos so that as many that can lay hands on these videos, they can begin to follow us and begin to probably now apply what we teach so that they can now begin to see the forex market from a different perspective. So having said that, we look at the dollar aversion gauge and we notice that currently the dollar aversion gauge is saying that there is confidence coming into dollar gradually. And having said all of that, we now have validation to take our trade on CHF Actually, this trade is valid both on the USD JPY, is valid even on Euro JPY, but we took that of, you cannot take If you take all the trade signal, it means you are just risking, you are increasing your risk in the market, because whatever happened to Euro JPY or USD JPY or CHF JPY is going to be the same thing at the end of the day. But now we now look at, okay, which asset can we trade? So we pick CHF JPY. So we position for our trade. Then how do we do that? We have some set of rules that we are expected to follow as if we are robots. When we trade the cash flow, the PMI cash flow model, this is one of the models of our trading system at Potential Miners International. And this model is what we use to take trades, within 24 hours, within a week, so that at least we can have cash flow running while we have other investment and project model where we take trade and we leave it to run maybe for some days, for some weeks, and if possible for months. And that's how we trade at Potential Miners International. But so that we can have cash flow flowing, so that we will not expose ourselves to unnecessary pressure in the market. So we have another framework where we can pick trade and take ratio 1 to 3. Our target for the cash flow and the PMI cash flow model is ratio 1 to 3, and that's what we did for CHF JPY yesterday night, and this morning the trade already delivered. So let me just walk you through the step-by-step guide or rules or conditions. These conditions, you will have to follow them strictly as if you are a robot. That's how we trade at Potential Miners International. No emotions, there's no panic. You just look at the chart. Once the rule is met, you tick it. Then once your trade is mature, then you position for the trade. So the first thing we look at is, what is our directional bias? What is our directional bias? Having said, having established the direction of the asset from the capital flow narrative. Capital flow narrative combines the fundamental storyline with the sentiment storyline. Then will come up with a conclusion to say what is the bias for this particular asset. So we told the story both at fundamental level and at sentiment level. Then our conclusion for CHF JPY is that we have a buy bias. Now we now come to the technical storyline. On the technical storyline, we want to be looking at our directional bias gauge. There is a gauge that we make use of at Potential Miners International. I've made a separate video explaining how this gauge works. This gauge helps us to identify the directional bias of any asset in less than 5 seconds. Once you look at the chart and you activate the gauge, you can decide, are we buying on this asset based on the technical storyline now, or are we selling? So having the gauge on now, we realize that our directional bias is a buy. The next thing we do is just to have an idea of a long-term perspective of the market as to where is the market heading to. We look at the market orientation. I've done another video on market orientation. You might need to search for the video so that you can watch it over and over and understand what I mean by market orientation. Remember that at Potential Miners International, our approach to the market is from a professional standpoint. So whatever we are dishing out, these are practices of big players in the market, and you really want to sit on each of these concepts and understand it. So the market orientation for CHF JPY was still confirmed to be a markup. A markup means that you have an uptrend market orientation. You might need to go and watch that video. I don't want to repeat myself here. But looking at the chart on the monthly chart now, or the monthly time frame, we observe or we confirm or double confirm that the market orientation is a markup which is in alignment with the directional bias on the weekly. So the next thing we do is we go to our daily. Now on the daily, our focus on the daily is the market structure. I want you to follow me closely so that you can see how we just look at the market from a relaxed point of view. You don't need to stress yourself at all. There is no emotion attached to this. There's no I feel, I wish, or what I want the market to do. We just follow the rules, and our hedge is rooted in following these rules 100%. So when you get to the daily, remember that on the weekly we look at the directional bias. After picking our asset, we look at the directional bias. On the monthly, we look at the market orientation. Now, on the daily, we want to see market structure in alignment with both the directional bias and the market orientation. So, for the daily, we are expecting to see a bullish market structure, which means we should see series of break of structure or change of character to the upside. That will confirm our market structure to be in alignment with our directional bias, and that is what we saw. If you can see my chart, you can see we have change of character here, and of course let me quickly draw this so that at least somebody, you see change of character here, and we still have the market push up. You see it now. In fact, from our tool, there is a particular tool that we also employ, or that we make use of, which draws the market structure automatically. So in viewing market structure, we don't stress ourselves to say this is the structure, this is not the structure. This tool is going to draw the market structure for us clearly. We just look at the structure, then we confirm that we have a bullish market structure in alignment with our directional bias and market orientation. So having said this, even if you want to draw it manually, you can still do that. You have the liberty to do that. But because we have access to this tool, and this tool is free, the only thing you need to do is to reach out to us to get the settings, because we have done our research to put the tool in the proper settings such that it's going to really give us the optimum overview of the market structure at any point in time. So looking at the chart, we notice that we have series of change of character in favor of the bullish market structure. Then we have break of structure too, break of structure, break of structure. We have now confirmed that our market directional bias, market orientation, and the market structure, they are both saying we should buy. So we are now going to move to the 4 hours chart. And this is how we take the trade. And of course, you will see how we take the trade now. This trade had already played out. I just want to give you overview of what we, our analysis, the process of our analysis. So on the daily, you are to identify the bullish move that you can see the latest. Then you are expecting the price to trade back into below 38.2% retracement level. So the third tool that we use is the Fibonacci extension. These are free tools. So, and they are not indicators that will confuse you. They are tools. If you know how to use them, you can use them to your advantage. So we use the Fibonacci. We are expecting that if you have an impulsive move on the daily, we only take trade when the market trades back below 38.2. So this was our impulsive move on the daily. And of course, we now waited for the market to trade back below 38.2. This is below 38.2. You can see this 38.2. So we go to the 4 hours chart. On getting to the 4 hours chart, this is 38.2, this is 50, this is 61.8. So we are expecting to see, do you have any order block below 38.2? Any of the other block that you can see, you have to mark it. So we spotted one. This is one order block. The tool that draws market structure will still help you in this regard, because you will see a sign that there was a break of structure or change of character, and that is going to form the origin of that. That origin is what we identify as the order block. Are you getting it now? So we identify this as the order block below 38.2. Then we mark this as our cash flow money box. We expect the price to trade back into this cash flow money box. Are you seeing it now? So we waited, the market or the price came back This was yesterday. The market came back, then we'll go to 1 hour. So the time frame where we pick the trade is 1 hour. So after the price has trade back into the cash flow money box, you expect an engulfing move of minimum of two candles, and you can see three candles engulfing move. This will now form your the high of that engulfing move, or the price, the candle that was engulfed will form your entry, and the low will form your stop loss. Let me The low will form your stop loss. You see it now. Now what we do is that this is supposed to now be your entry box now. Entry box, entry box, entry box, entry box. So what we do is you take your trade right on top of that particular entry box after minimum of two or three consecutive candle that forms an engulfing move. So you will now look at your spread. If the spread is, say, let's say the spread is 4, you will just add 3 pips to it to make it 7. Then that will form your the position of your. Now look at this. Now this is the lowest low when the price trade back into the cash flow money box. So you just have to add the spread of that particular asset plus a clearance of 3 pips to hit. Now the spread as of now, as of when we picked the trade, it was around 4 or 3, if I'm not mistaken. Although I use different brokers, so a particular broker gave me, because I use an account with zero spread, so that spread was very small. I use another one that is not that just normal account. So just with the clearance of this was the lowest low. The lowest low was around 0.51. I could remember that we now put it at 190.45. That was where we put this thing yesterday, and we take position, and the trade came back and picked us. That was yesterday. Then we target ratio 1 to 3. This will deliver anytime, any day if you follow these rules. Now, if this trade is going to be a winning trade, which means a trade that you will fall on the positive side of probability, it will deliver clearly with no stress. However, if it's going to be a trade that you will fall on the negative side of probability, it will just stop you out and you don't need to chase the market. Do you see now? This is how we trade at Potential Miners International. Imagine you take a trade yesterday night, and by this morning it has already delivered ratio 1 to 3. Now, it's not even taking the trade that should interest somebody. It's the process of looking at the chart, overviewing the market from a professional standpoint. The process through which you have picked the trade. This is a process where you can trade like a robot and you will trade like a professional every now and then. you know then when you now begin to have enough of capital, you can now begin to see that trading in the financial market can be done like a conventional business, that this is my business because I have a trading system. This is how we roll at Potential Miners International, and we are encouraging both struggling existing traders and intending traders to begin to look at having a structured system of approaching the financial market. That is the hedge you need, and that is how you can stay long in the game and make enough of money for yourself. Until I see you in the next video, my name remains Mr. Akimbode, the King of Ways. Thanks for listening. Don't forget to subscribe and like this video. God bless you.